especially because of what just happened with the Bitcoin ETF, right? So
Yeah.
that's probably not a good analogy.
In recent days, interest in Bitcoin ETFs has waned among average individuals. Over the past week, notable ETFs like BlackRock's IBIT and others focused on spot Bitcoin have set fewer records, coinciding with a period of erratic cryptocurrency prices. Experts believe this trend marks just the beginning, anticipating a new wave of investors pouring billions into the market. In an early January interview, Cathie Wood, the founder and CEO of Ark Invest, expressed her anticipation for the likes of Wells Fargo, Morgan Stanley, and Merrill Lynch to offer spot Bitcoin ETFs. Similarly, Matt Hugin, CEO of Bitwise, foresaw a significant surge in institutional demand once major banks launched Bitcoin ETFs. He remarked, "I think there's an even bigger wave coming in a few months." Recent insights from both Cathie and Matt reinforce their expectations for the next massive institutional demand wave, surpassing any since ETFs gained approval in January. Cathie specifically discussed her expectations regarding Snyder, co-founder of 21 Shares, in a recent interview with Empire. She touched upon topics such as Warehouse's forthcoming institutional demand wave, her $1.5 million Bitcoin prediction, and the probability of Ethereum ETF approval before 2024. This content highlights excerpts from the interview, alongside Matt's enthusiastic comments about Bitcoin ETFs and the potential involvement of multi-trillion-dollar investors. Viewers are encouraged to watch the complete video to grasp the critical insights from two influential figures in the Bitcoin ETF landscape. By subscribing and engaging with the video, viewers can support the channel's growth and reach a wider audience interested in crypto investments. Thank you for your support and enjoy the content.
Yeah. Yes. Okay. Well, thank you. Yeah. And we summarized it as the journey back because that really references how long duration assets were pummeled during 21 and 22 as interest rates went up. So interest rates, the Fed increased interest rates 24-fold. That has never happened in history. You go back to the 80s when Chairman Volcker was trying to put a stop to inflation, and he took interest rates up twofold. You know, this was more than 10 times that magnitude. And many people were dismissing it, saying, oh, interest rates were so low. You know, back then they were 10%, he went to 20%. Yeah, they had been the businesses, consumers had been getting used to it over 10 years, maybe more than that. This time it was just a shock. And what we believe has happened is a rolling recession here in the United States. Housing is down 20 to 40%, depending on the measure. Autos they're not in expansion territory. They're closer to recession territory in the 15 to 16 million unit annualized rate range. You have commercial real estate in a world of hurt, office, and now multifamily. You have bank deposits still leaving the system. They're still negative on a year-over-year basis. And in fact, they're now negative over last year's negative. So it's a double whammy. We don't think the regional bank crisis is over. And finally, companies are losing pricing power. So inflation as measured by the CPI has come down from 9% to 3%. So we no longer have to fight we're in a 70s style inflation and it's not going away. This is, we're going to end up in the high single digits. So we're not there. We're at 3%. Now people are saying, oh, stagflation. We haven't reached the Fed's 2%. We listen to earnings reports and listen very carefully for pricing power. Companies are losing pricing power. Those who are trying to fight the unit declines with higher prices to salvage their margins are getting hurt, and they're going to end up cutting prices. Walmart saying prices are negative, we're in deflation, and Costco is saying they're flat, moving into deflation. So we think companies are going to lose pricing power, and that is going to accelerate the shift towards innovative solutions to this problem. And that's what our 5 major innovation platforms are all about. So robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing. So they touch every sector, and they are converging. And this is what we think a lot of traditional asset managers are missing, the convergence between and among these technologies. And they're highly deflationary. Now, many people are saying, well, wait a minute, isn't Bitcoin a hedge against inflation? Isn't that the reason to own it? Why are you such a big proponent of it when you think there's actual deflation happening? Well, if you look, when we took our first exposure to Bitcoin in 2015, it was $250, and traditional asset managers and others in the ETF space were making fun of that decision. And so we paid very close attention to the daily moves. And at the time, Greece was threatening to leave the European Union. And we were worried about, a relapse into the European sovereign debt crisis. Well, if you were watching Bitcoin very carefully back then, you saw it nudged up every time that there was a flare up around Greece. And that gave us confidence that Bitcoin might be a risk-off asset as well as a risk-on asset. And that was confirmed last year during the regional bank crisis, when regional banks imploded and Bitcoin went up 40 to 50%. So I think this recognition that, and I know I've pivoted here a little bit from that paper to the topic at hand, but I think that realization that Bitcoin is not only a risk on asset, a technology, as technology is, but it is a risk off asset in terms of counterparty risk. There's no counterparty risk here like there is in the banking system.
Nice.
One of the things, just in terms of sizing the opportunity, which is, we spend a lot of time doing that. In Bitcoin, you're talking about a global monetary system. You're talking about a technology, and you're talking about store of value. And we think ultimately it will play all three roles of money. So, and a new asset class. So you've got three major, so monetary system, technology, new asset class. The Ethereum, some people will say maybe it will be a currency, but it will not be a monetary system the way that Bitcoin is. Bitcoin is the most secure. And, I think when people ask us, okay, how's this all going to shake out? Is Bitcoin going to usurp the dollar's role as the world's reserve currency? We don't think so. We think the strong are going to get stronger. And what I mentioned earlier, the emerging market currencies are probably where you're going to see a lot of defections. So it's a very big idea, and we think it will be the biggest by far. It will dominate the crypto asset ecosystem. I'm not sure, Ophelia, if you feel as strongly about that. I think our team does. So it will account, we think, for more than half of the crypto asset ecosystem ultimately. By 2030, it was 2030. And it stands. But I'll tell you, that is the bull case. The bear case, the base case for 2030 was roughly $650,000. However, what has just happened, the green light from the SEC, we believe will cause the institutional participation to move towards the bull end of our set of assumptions, which was closer to the 5% asset allocation to Bitcoin over time. So we think that probability has gone up. So the probability of the bull case, the 1.5 million, has gone up. Ophelia mentioned that we are one of the first two in line for the ETH approval, and I think the probability is probably going down. Do you agree with that? Because one of the telltale signs for Bitcoin that something was going to happen with the spot Bitcoin ETF was the fact that we were communicating with the SEC. And unless Ophelia knows something I don't know, I just think that the SEC is still biding its time, maybe studying the issues from what we can tell. And and our filings, if they're going to be approved, that will be a May event. So I'm happy to hear Ophelia slightly more optimistic. And I think fitting in with what she says is, yes, there are futures out there on Ether. The same was true with Bitcoin. So fitting into similar structure, similar setup. The difference, though, I don't know who has staking still in their filings. Maybe everyone still does. I think that has been a sticking point. And has anyone pulled a staking out, Ophelia? I saw Fidelity had, and that to me said, okay, they're adding it in. Since that seems to be the sticking point, maybe they don't believe anything's going to be approved, and they're just saying, what the heck? That you just presented would have gone up on that if that were true.
Please share your thoughts on Cathie and A's interview. Bitwise made headlines in January by revealing its digital wallet address. In his latest weekly email to investment professionals, Bitwise CEO Matt Hugin anticipates another surge in institutional demand for spot Bitcoin ETFs. Hugin suggests that Bitcoin's short-term holding pattern will shift following the ETF's approval on national account platforms like Morgan Stanley and Wells Fargo, advising investors to focus on the long term despite recent volatility. According to Hugin's memo, Bitcoin's value may remain steady amid minor public opinion fluctuations, as it has gained approximately 300% in 15 months and is likely to continue on a bullish trajectory. With over $100 trillion held by new spot Bitcoin ETF investors, even a 1% allocation could inject $1 trillion into the market. The introduction of spot Bitcoin ETFs in January opened the doors to professional investors, potentially unlocking trillions of dollars for the crypto market. While $12 billion has poured into ETFs since January, the potential future influx from global wealth managers could be staggering. Hugin believes that BlackRock and other spot Bitcoin ETFs have only tapped into 1% of the future billions expected to enter the market. Do you agree with his assessment? Share your thoughts below. Thank you for watching, and don't forget to subscribe to the channel and enable post alerts for more insightful videos like this.